Good evening, all. Ira Epstein, and here we are with your SPDR ETF. I guess we can call it a stock market wrap-up. And this wrap-up is for the evening of Wednesday, the 7th of September, 2022. Well, what a day. We had finally a bounce in the market. For those of you that saw my morning video on YouTube or a website, that's where I post them both, you saw that I had pointed out we had 7 days in a row down in the Russell, and that you hadn't done that since 2018, and maybe the market was ready for a bounce. And a bounce you got. Is it a change of direction? Well, you know what the bulls are going to say? They're going to say, the all-important 3,900 level, the zone, held, and it did. But we haven't turned. You haven't proven a thing. You held a retracement. Since Jackson Hole, the market is broken, and it came back down to a support zone. I can live with that. So you can't keep hanging on to Jackson Hole because 6 days from now, we get the CPI reading. So it's logical that at some point, that big break, people take some money off the table and then look to see what's happening. So you had a good bounce in SPY, IWM, QQQ. All these markets had big rallies today. Many of them lost embedded readings, bearish ones. And if they closed over 21, you have to be out of shorts. The beauty was, even if you sold short into it today and you got stopped out today, I'm not saying that happened or not, but today was the day to definitely be probing the short side. The losses were probably on the very cents. We're not talking big dollars. That's what I'm assuming it was in most of them. I haven't gone back and looked, but I looked at some and I said, okay, if that's what it wants to do, fine. Do I see a reason to be bullish? That's the bigger story. Not yet. Now, that story can come. You know, what if the CPI goes from 8.5% to 7%? Well, you know that people are going to say, hey, wait a minute here. That thing's really tumbling. If you look at the energy, which I can't show here, I can show you USO, I guess, down $3.80. That's a big break. We're down about $4 today in crude. The markets in the energy are realizing, be it the Brits, the European Union, America, Japan, the economies of the world are slowing down. What about the big boy, China, too? Slowing down. And if you're slowing down like in China and you're locking down 21 million people at a time in cities, well, let me think. You don't need gasoline. There's no cars on the street. You don't need to deliver food to anybody. In terms of restaurants, they're all closed. People can't take public transportation to go for entertainment because that's all closed down. Now start multiplying this times how many cities. And do you need to keep buying from Russia as much of that fuel? As for the U.S. and Iran, it does appear a good thing that we are not going to do a deal with Iran anytime soon. I didn't think we would in front of the midterms. I think it would have just crushed the Democratic Party. I think the uproar on that. Could it happen afterwards? I don't trust this president as far as you can throw him. I don't think he has an idea about world politics or what he's doing. I respect him as my president. I don't have to like his policies. I think they're wrong. And if I sat down with him, I'd explain why I think they're wrong. And I know there's a world stage that I'm a novice in. But you're going with a terrorist country and you're going to give them more ability to be terrorists? No. They cheat anyways on their oil, Iran. Let them keep cheating. You accomplish the same thing. The oil sneaks out that way and you close your eye. You don't have to go back into the treaty. Keep the sanctions on them all the other ways. Everybody knows what you're doing, Joe. That's what's going on. Okay. So let's go to the charts anyways and see where we're at. I've got Shopify on, and I'll leave it on for the short term here. It's certainly not doing any good. It rallied today 3.8%, but it's been in a terrible bear trend. You can see you've got the lower highs, lower lows. See, I don't care about the name of what we're looking at. I care about the pattern. So do I care if I'm looking at 3M, GameStop, AMC? I truly don't. I'm looking at the pattern. And the trend is down. You've had a bearish crossover where the 18 day average got under the 50 and the market made a new low. So that's typical of what happens. The market has hit the Bollinger Band. No, it hit it back here. You've been falling, but you haven't gone into what I call a capitulation. A capitulation would take the market back down to the Bollinger Band. Haven't done that. And you still have the embedded reading. So until the red line closes over 21, it's at 15. What do I think on an extension of a day like today? I think the pros will continue to sell short and cover if you get a reading over 21 in the slow stochastic with still an open mind to possibly getting to the lower Bollinger Band. AMC, I was listening to people today saying you have to be nuts to think that AMC and these companies are going out of business and that, they're just going to be gone. I understand what he said. I don't envision life without being able to go to a movie theater. They have to change their model. I don't know what the model is, and I owned a movie theater, and no, it did not succeed. So, yeah, I had a losing venture in it. And I learned the business, and it's a terrible business. It's as simple as that. How do you compete, number one, with cable, which is now getting movies as fast as the movie theater? Number two, the price of going there, the rent of going there. It used to be that the movie theater was the anchor of a mall, and now the question mark, is it really the anchor of the mall? In COVID times, it's not, but less COVID or the new way that we deal with COVID, it certainly might be. But the problem is I'm not going to go out and spend $20 for I live in a big city, so $16 to $20 can be the cost of going into one of the better, so-called better theaters, the reclining seats, you can order food and all that. Well, by the time you order your food and all, what's that experience going to cost me and my bride, as I like to call her? It gets to be very expensive. I could stay at home and watch a bad movie just as easy, buy it right on TV, the same movie, and I've got a big screen, and it's enjoyable, and I don't have all that. That is what they're fighting. They've tried other things, AMC, bringing in operas, fights, you name it. I remember going and watching Muhammad Ali fight in big screens in movie theaters. It was a ball. They've got to find a way to do that again, whatever that way is. But right here, this is just a languishing market. You can get short covering rallies, but the model stinks. Apple. Apple generally falls upon the announcement of the new products. Did you do your homework and read that? And Apple today rolled out all kinds of products. I was disappointed. I had heard they were coming out with a subscription phone. Now, I know I read the article. I wouldn't know about it. I don't cover Apple for research. And bing, they didn't. You have an embedded reading. You're getting a bounce. I think you're going to see willing sellers on this rally unless the red line closes over 21 and until that occurs. Bearish. Disney. Never did embed. Just oversold market. Do you sell an oversold market? If you sell an oversold market and it stays oversold, most traders have parameters and they build in things that say, nah, you don't do this if such and such is happening. I'm making it in grammar you understand. It's filters that they build. And some people say, no, I'm not going to do that unless be it the MACD, the slow stochastic, some number that they're looking at on momentum locks into something. Oversold is not locked in. Be careful whenever you see that. XLF, is the market finally going to get a pop? It closed at 2054. So if you're bearish, you're in trouble. It's got to get right back under tomorrow, under the 20 level to keep the embedded reading. Because if not, of where you settled, I can tell you, when you close near the high of a day, you're probably going to jump 3 points right off the bat. That doesn't mean it'll hold those 3 points, all right? The way the math works on the slow stochastic, you'll jump up. And then if you start falling again, if you took out today's low, you're right back in trouble. So the resistance is probably going to be tested at 33.69. I certainly don't like the idea of being short up there now. XLI. You held on to the bearish reading. But this is the first challenge of the combination of the 100-day average and the Bollinger Band. I was explaining that to traders in my subscriber videos this morning. Not the ideal setup to go short. On the way back up in XSD, the resistance should now be 171.91. did we ever embed in this market? You need 3 days in a row where the numbers are under 20. So you had today, this is yesterday, and the day before. So you got your 3 days in a row. Did you have one the day before that? No. So today is the third day. Could today have been the sell day? If you take my course, you will learn, okay? You learn a lot. It's 13 chapters in it. It shows you what to do. We then look at XHB. All right, here is a market that's coming live. Resistance tomorrow should be at 60.74. I expect the pros to probe the short side. And if, let me say if again, if after the first half hour, probe it after the first half hour, and this number is not over 20. If it's over 20, I don't think they'll do it. I mean, these are simple rules that you look at. In the energy, all right, you have fallen back into the support level of the 100-day average in the 18, but you're in a bear trend. So this support has only been able to throw you back to the 18-day average where you're having a problem. If it decides to let go, look for 75.58 to be hit in the energy sector. Is there anything that could be bullish on the chart? Absolutely nothing. Is the market oversold? It is. Any reading under 30 is oversold. That is different than embedded. GLD, on the close today, what's the reading? Slow stochastic. You got to be out of any and all shorts the way that I teach charting. I have been bearish all through here, all through there, and now with the close of business today, I don't want to be short anymore. That does not mean I'm bullish. Don't want to be short anymore. Markets often go from bearish, neutral, bullish, or back to bearish. It's gone into a pause factor. Even with the swing line pointing up, the bias of the market is down since you have yourself under the 18-day average of closes. We then step over to copper. Well, copper's got China as its ally, right? Well, as the headwind is the right word. And every time I read that they're closing down another city or another part of a city of 21 million people and they just keep doing this, it can't be bullish. And it's not. You're seeing that in the market. TLT. So here's what you're now getting ready to play. If you're going to play this, it is now, is it embedded? Both numbers are under 20. Yesterday, Tuesday, both under 20. Day before, under 20. Not the day before. One of them was on it. Tomorrow is the first day after it embedded where the pros are probably going to take a look, and I think they'll wait that first half hour to see what happens if they get a rally. Do you keep the embedded reading? And if they see it there, I think they'll hit it at that point on the short side. Keep in the back of your mind, traders are going to start now getting ready for whatever Tuesday's CPI report shows us. And again, I'm going to repeat, you get a reading of 7, it's probably going to be considered a very friendly report. Even a 7.5 might be. People say, well, if you're falling a full percentage point like this. But if you're going down a 0.5 percentage point here, there, how many months of that do you have to go through? The good news is it's weighted with energy, and energy has fallen apart. The bad news of some of the things, remember I told you, things are going to be sticky. Wages aren't falling. Read the beige book that came out today. I'm sending out my newsletter tonight. I'm attaching it. You read that right in it. It explains it. That's not what they're seeing. In Chicago, our evening edition of the Chicago Tribune, I was reading. All of a sudden, there's bidding wars for rent. And they say, you better come prepared to pay $500 more than you think. I don't know what they're paying in rent, but that could be 10, 15, 20% more, all right, for fine apartments, I guess. And that is what they're saying. So they were comparing. They said, New York's woes have come to Chicago. Well, that's because it's nearly 5.75% for a mortgage. Home prices that did slip finally a little bit in June, 0.77, not a percentage point. They'll slip a little. We'll see what happens. There'll be homes that come on the market. Let me tell you what will happen in homes since we're here. People that bought during COVID, their second family homes, and now that rates are going up, they may have mortgaged it, easy money, and they realize, hey, this thing's costing me more, insurance is costing more, so I really need that. Life in the city's back to normal. And you go through these cycles. I had bought in Miami Beach, South Beach years ago, and owned a wonderful place there. and bought on the dip. Is one of those cycles, rode it back up, and as I got older, it just wasn't for me anymore. Now I live in Miami, but the beach isn't for somebody with the gray hair like me. I'd be the old guy. And that's what happens. So these cycles will happen. They're going to happen in the communities that are basically, they come down during the winter months, and it gets to be quite expensive. Airfares, everything changed. I remember I went through this cycle, so I can write a book on it. I know how it occurs. And I got lucky, I did well. UUP, all right, you're on the verge of a problem here. You got an 81 reading now. So you're staying over 80, but if you get under 79, which probably happens in the first half hour of trade, this is the dollar, be careful. I was telling traders today on my Spider subscriber video to come out at the market in UUP, and it was way up. It wasn't here. And I just said, I think we've got a day, but I was using a different logic. I said, go, you're up at this band. We have that CPI. I just think you've made the money. FXE, oversold, getting a bounce in the market. So you put it together, you get these games, you play the games, and you understand that you get big moves down or up. Nothing lasts forever. They'll go into pauses. Is there a report around the corner you got to look at? Yes. What are some of the trading tools? Like one of my favorite is obviously the Bollinger Band, but not the band itself. The band with slow stochastics, the way that I teach putting the two together. You can do this. Take a look, get the course, and learn. I'm Ira. You have a good evening. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.